Hey guys, Josh Ehren from the Findlay Mortgage Team, and in today's video we're going to discuss some lending products you probably didn't know about. We understand that most people's situation isn't cookie cutter and requires a bespoke product to be able to find a solution for your situation. So we wanted to break down some pretty cool products that we thought were in the market that you guys would find a lot of value from. Let's get right into it.
So the first product we want to talk to you about is net worth lending. So net worth lending allows us to essentially leverage the amount of liquid net worth that you guys have. Most lenders usually require a minimum of $250,000 in liquid assets, but we can leverage that to increase your loan amount on top of what you qualify for on paper. So for example, if you're looking to purchase a home and the loan amount that you need for your home is $600,000, but on paper, when we run your application, you only qualify at $400,000 within your standard, TDS and GDS ratios, you're gonna need a little bit of help to get to that $600,000. Now, if you have that minimum of $250,000, we can actually use that to bump your loan out. So what we do is for every dollar for dollar in liquid assets, we're able to increase your loan amount for that dollar value. So again, if you have a minimum of $250,000 in liquid assets, we can then take that $400,000 loan amount that you qualify for on paper, bump that up to $600,000 and be able to qualify for the $600,000. Now, there's some things to keep in mind. The amount of loan to value that you can qualify for does depend on what your total TDS ratio is at that final value. So again, if we're qualifying you on paper at $400,000 and you're looking to get a $600,000 mortgage, for you to be able to get an 80% loan to value at that $600,000, your total debt servicing has to be equal or less than 60%. So even though you're borrowing on top of it, if that $600,000 has you at 65% TDS, you're not going to be able to put just 20% down. You're gonna have to increase your down payment. Now, if it is over that 60% TDS, it's gonna limit you to 65%. So there is a bit of a jump there. You go from 20% down to 35% down. So important to really take a look, talk to your mortgage broker, figure out where that final TDS ratio is. In terms of liquid assets that we can use, we're looking at cash savings, checking account, GICs, mutual funds, TFSAs. You can use your RSPs at a 30% discount, so they take into consideration that 30% tax. We use 70% of the RSPs. The only thing that you can't really use is a locked-in account. Anything like a LIRA, they're not going to allow you to use as part of your total net worth.
Yeah, a lot of business for sale people are people who have a large amount of liquid assets but don't necessarily show a lot in your T1 generals. This is a great product because even if you show a little bit, say $50,000, $60,000, and you split it with yourself and your significant other, having that large amount of liquid capital is going to allow you to be able to get a AAA product while not necessarily needing to claim as much as you probably need to claim to qualify for the house you're looking to purchase.
Yeah, and one last thing to keep in mind is that there are some lenders that will take a look at a 12-month history of your assets to make sure that you had at least the amount you need to qualify or greater throughout those 12 months. It's not necessarily, hey, yesterday I got some money and now I want to take advantage of it. There are some lenders that need to see a bit of a 1-year history, so just keep that in mind.
The second product we want to talk about is specifically geared towards business for self. We have a stated income and a declared income product. So our stated income product allows somebody who's been in business between 1 and 2 years to qualify for a loan based off of their actual business bank statements. You might have also heard of this as a bank statement mortgage. Most lenders who have an alternative side will be able to use this product. Essentially what it allows us to do is take a look at the last 6 to 12 months of bank statements. We can take a look at all of your deposits and then gives us a pretty clear idea of how much revenue you've actually generated. Some lenders will find a percentage of that revenue and use that, and some lenders will ask you to deduct some reasonable expenses from that, and we can use that amount of income to help you qualify for your loan. This product is great if you have been in business for 1 to 2 years and you can actually show a significant amount of capital coming into your business. The declared income product is a little bit different. It still has a great effect when it comes to business for self, just in regards to the fact that there is no real provability when it comes to showing bank statements. This is more of a true declared income product, meaning we will give you a document, and that document is going to ask you to write down how much you make annually on a piece of paper. Essentially what we need to do is prove that you have experience in that industry for at least 2 years, and it has to be reasonable within the actual industry you work in. So if you work in an industry that roughly makes $200,000 a year and you claim $1 million a year, that's not going to work. So it has to be reasonable within your industry, but this allows somebody who necessarily doesn't show a ton on their T1 General for tax purposes to qualify for a mortgage. Now, one of the disadvantages of this product or challenges of this product is usually it's only to 65% loan to value of the purchase. Most lenders will allow you to have a second up to 85% to bridge the gap, so your down payment isn't necessarily 35%, although the second mortgage behind it can be quite expensive. So depending on your current situation, it might make sense to put that liquid cash down, especially if you're cash heavy, you just don't show anything on paper. The great thing about this product is you can amortize out the debt, so this isn't an interest-only loan, and you can bump the amortization to 30 or 40 years, depending on the lender, which will reduce your actual mortgage payment, which is great. There is a rate premium when it comes to using this specific product and boosting the amortization, so just keep that in mind. These are Schedule B products, so there are some broker fees and lender fees involved, but the solution that these products can offer you are usually much less expensive than actually claiming the income you truly make on your T1 General on income taxes.
Yeah, the declared income is specifically good if you're next day business as well too. So if you haven't been in business for a full year, but you have 2 years of history in that field, we can use that next day business income to help qualify. So it's really good with that. And what's nice about both these products, the stated income and the net worth lending, both of them work on rental properties. So this is an option for investors as well too, to be able to get into a property. The next product we want to talk about is your contract rate qualifying type product. You may have heard of this. It's called like the no stress test product. Essentially what a lender allows you to do with this product is qualify for a 1, 2, or a 3-year fixed at their actual contract rate and not the 5.25% stress test. That is the average right now. Now on a 5-year fixed, they do implement a 1% stress test. So for example, if you were qualifying at 3.69, they are going to stress test at 1% and see what the qualify at 4.69. But that 4.69 is obviously much less than that 5.25, so it does help to boost your affordability. Now this product does come at a bit of a rate premium. You're not going to get your 1.35s, 1.45s and be qualifying at those. You're probably looking in and around that 3.25, 3.5 up into the 4 and a bit area. So depending on what type of term it's at and your qualification, again, it does help to reduce that when qualifying at your standard 5.25%. The lenders will allow you to go up to 80%, although they may have a reduced loan amount. You're typically looking on the higher end around like $750 for max loan amount. So depending on what your purchase price is, you may have to come up with a little more down payment. And again, this typically is some sort of alternative type product, so there are going to be some fees involved with the purchase.
The next product we want to talk about is your cashback mortgage product. If you guys saw our reel that we just dropped a little while ago, we broke it down in about 30 seconds, but here's a little bit more of a deeper explanation as to what this is. This is a phenomenal product if you are looking to get some cash back to do some renovations on your house or to possibly have some money to buy another investment property. Here's some things you should know. So there's a minimum 680 beacon score. Lenders can lend between 1, 2, 3, and 5% of the actual loan amount back to you on closing. This can't be used for a down payment source, but it can be used for closing costs. So 5% is a significant amount of cash depending on the size of house you're looking to purchase. It has to be an insured product or insurable product, so you can only actually use this product for purchasing a home, and it can't be directed for the down payment. So you have to actually have the source of down payment in your bank account, whether it's a gift, whether it's from your own personal funds. You have to actually source your down payment from yourself, but the 5% that you have cash back can be used to replenish your savings from the property purchased. Some really important things to note is something called a clawback. So this money doesn't come with no strings attached. You can't break your term after you close the mortgage and expect to keep the money. So for example, if, it depends on the lender, but some lenders like CIBC, for example, if you break your loan the day before your term is up, they take all the cash back. Whereas MCAP, for example, what they'll do is they will have cash back, clawback tiered based off of how long you're in your term. So something to keep in mind is if you're going to be choosing this product, understand that you're going to have to give some of that money back if you do plan on breaking the term within the 5 years that you decide to have. A really great product to allow somebody to replenish their savings or to purchase another rental property. Just be aware that the cost associated with this may be more than actually what you get in cash if you do want to break it early.
Yeah, again, just talk to your mortgage broker, plan out your term, make sure that term matches your product moving forward, avoid those clawback penalties.
One more thing, you can't buy, this isn't for rental products, it's only for owner-occupied products. So you can't buy a rental with this product, but you can fund your down payment source from purchasing a principal residence with this product.
The last thing we want to talk to you guys about is the insured business for self, like Alt-A type product. So on the insured insurable side of the lending scale, they also have a business for self product that allows you to do a stated type income product as well too. So each of the insurers have their own specifications. So on the CMHC side, they're looking at an individual who's been in business between 1 and 2 years, and then on the Sagan and Canada Guarantee side, they're able to work with individuals who've been in business for 2 years and greater. The max loan to value on this product is 90%, so you have to come up with at least 10% down. Now the insurance premium on this product is much higher, so 10% down, you're actually dealing with a 5.85% insurance premium. So 10% down, that 5.85, you're effectively in and around 4.2% in your equity position. So not really great to be able to perform like a BRRRR or a flip, but getting into a house if you do show less income can be a really great product. You can go up to the 80% mark as well too. If you still want to put 20% down and take advantage of that, you can do an insurable option. So you still will have an insurance premium, but you can increase your equity position in the product. The max loan amount for this product is $750,000. So just keep that in mind when considering your down payment. Gifted funds are okay. So again, you are able to borrow funds for an immediate family member to be able to go towards your down payment. 680 Beacon score minimum for at least the one borrower. The other borrower can have a lower credit score, just depending on the situation. Standard insured TDS, GDS rentals, so a max of 39 and 44, but ideally on this product, we're qualifying with ratios around 35 and 42. It just shows a lot more strength to the insurers. You're not having to utilize your max amount of space on your debt side to be able to qualify. You have enough income coming in to be able to qualify and still have some room. As all stated income products, it does undergo a reusability test. So, like we said earlier, if you're in a field where the average income is between 150 to 200,000, you can't just put $1 million down and expect to be able to qualify. It's not going to work. They are going to take a look at some of the averages and just make sure that it makes sense. So the last thing to know about this product is you can't work with direct commission payments. So if you're getting paid commission directly into your personal account and trying to qualify that way, no, we're not going to be able to use that. Now, if you're getting commission paid into your operating company and then you're then T5ing or T4 income yourself, we can work with that, but we can't work with direct commission incomes.
Yeah, these products on the market are phenomenal and offer a ton of value to the people who need them. The majority of these products we see, business owners utilize these products, or people who necessarily aren't able to show all of their income on paper for either for tax reasons or for other reasons. But I just need everybody to understand that these products are available in the market. They're there for you, whether you have a large down payment, you have minimal down payment. There are some premiums and some costs associated with finding these solutions, but just understand that these solutions are available in the market and homeownership is available.
Okay, guys, so just like the key point there is that these are solutions-based products. So they aren't going to come with the best rates on the market. There is going to be a bit of a rate premium, but they are fantastic solutions for those who are unable to qualify conventionally.
Hey guys, thanks so much for tuning in with Ehren and I today. If you guys have any questions at all, please feel free to reach out to us directly. Our contact information is below. And as always, we appreciate you guys watching our videos.